if it was all perfect and TA was just worked all the time, there'd be no market. Computers would arb that out a long time ago, right? I mean, there'd be no market. Any computer could figure that out if all TA was perfect, if all setups were perfect. And like you said, you just have to buy when these lines cross or whatever, you know?
Yeah. Yeah. So kind of the weird part of that situation is that the thing that would, in theory, make trading beautiful, certainty, if that
Yeah.
existed, we wouldn't have a job.
Yeah,
There'd be nothing
exactly.
to
There
do.
would be no market. Yeah. I mean,
Yeah.
the market, if you think about it, the market pays us to take on risk. So if there was certainty, there wouldn't be any risk. So then the market wouldn't pay us because you only get paid when you take on risk. So it wouldn't exist.
This episode of the Speculators podcast is sponsored by Elite Trader Funding. Elite Trader Funding is an evaluation company that provides traders with the opportunity to earn income by trading in a simulated environment and never having to risk their own capital. All you have to do is pick an evaluation and follow the rules. Traders who pass the evaluation will keep 100% of the first $12,500 in profits and then 90% of all the profits after this. You can get started today with Elite Trader Funding by clicking the link in the description and using the code ETFCorbs for 40% off every evaluation that you want to do, except for the fast track. Those are already heavily discounted by default. Now, the most important thing about Elite Trader Funding is this is a company that you can trust. They're reputable, they're trusted by me, they're trusted by thousands of other traders, and they have a 4.5-star rating on Trustpilot. They have an active Discord community, they have incredible customer service, and they have the widest selection of evaluations on the market. So whatever style of trading you're into, they're going to have the perfect fit for you. They even have a swing trading option, which nobody else offers. We're gonna say more about this later in the episode, but a big thank you to Elite Trader Funding for sponsoring this episode. I'm very happy that you're here. Let's get started with today's episode.
Mr. Shadow Trader, welcome back to the channel. It's great to see you.
How are you? It's good to be back with you again. I enjoyed our first talk. I'm excited for this second one.
Oh, good. I love to hear it. You got a beautiful location. Where are you located?
This is home for me. Just overlooking the valley in Los Angeles. So yeah, I just moved here about maybe it's been about 3 months.
Oh, okay. Very good. Well, it's beautiful, so everything looks great. Now,
Thank
I
you. I
know that this
appreciate it.
is yeah. I know this is the second time you've been on, and it's been a while, a good year or so, I imagine. So
Mhm.
maybe just by way of a quick introduction, how has the last year or so been? And maybe is there anything particular that you've been primarily focused on?
I would say it's been a lot of the same. I mean, I don't remember exactly what we were discussing, but my bread and butter is weekly options. A little bit of futures on the side, not too much, but mainly I focus mostly on understanding what is market direction in any given moment so that I have the wind at my back when I'm looking at short-term opportunities in the options market, because my time frame is like 2 to 5 days, sometimes 10 days, maybe 2 weeks at the most. It's super important for me to know what the market is doing. And that's really been my MO the whole time. And it continues to be that, ever since, all the time. That's
Yeah.
basically where my focus is at.
Yeah, very good, very good. And of course, during our first interview and the first time you're on the channel, I feel like we spent a lot of time talking about your backstory and even the
Mhm.
process that you're going through and the method that you're using and what you're focused on. So for reference, anybody can go back and listen to that and be caught a little bit better up to speed if you want to go deeper on that subject. One of the things I'm very interested in with being able to have you back and having some of that out of the way, just being able to pick your brain a bit more and to be able to bounce some things off of you. I know that it's great to have just years of wisdom, and the good book will
Mhm.
tell us about the wisdom of the gray head. Just meaning to say that there's a lot to benefit from being able to just ask questions and just sit down and listen to somebody who is farther down the road, who's been at something for a long time, who's still around, who's still on the path. And so I'm very glad you're here. I'm very excited to talk to you, and I thank you very much for the time. Maybe if I could introduce let's say, first segment here. If it's okay with you, what I'd like to do is maybe just paint a scenario for you, kind of a stereotype of a trader,
Mhm.
and just give your thoughts. We can maybe entitle this "Shadow Trader Gives His Advice." And
Mhm.
so I'll just kind of go through a hypothetical, and then if you wouldn't mind, just however you would advise this trader, I think that would be very helpful. So if there's any question about it, I'll probably just list the first one here, and then I'll just go through a few of these with you, if that's okay.
Sure.
Okay. So how would you advise, what would your advice to be to a trader who feels like the market is just out to get them? Feels like if I'm thinking about getting in the market, it seems like when I get in, that's immediately the market turns against me. If I kind of get out of the position for a loss, it immediately starts coming back. If I feel like I'm going to stay on the sidelines, the market goes perfectly, exactly where I wanted it to. And they're kind of left with this feeling that somehow the market is targeting them and the market is out to get them.
Yeah. So firstly, I would say is they need to come to a realization that they're completely wrong about that. Obviously, the market is not out to get anybody. The market doesn't know or care about your position. And I always like to tell people when they ask, like, what is the market or what are we doing here? Always think in terms of the fact that the market is an opportunity machine. That's all it is. Every day when I wake up, I come to the market, I'm super excited. And 9 times out of 10, I don't even know what the opportunities are going to be that day. I let the market present them to me. And because I've been doing this for a while, I act without hesitation. It doesn't matter to me. I actually had this conversation with my subscribers very recently. I said, maybe you guys think that I spend hours at night poring over the charts to find these high probability setups that we can do together. But I said, I don't really. I come to the market relatively cold and just in a very open mind state. And I let the market tell me what to do. Obviously I have a handful of stocks that I'm looking at, but depending on how they're acting is what I'm going to do. So also more specific to what you're asking about this newer trader is I would probably tell them to either ratchet their size down to zero and look at things in a simulated environment, or ratchet their size down to some very tiny size that will not affect them at all if they stay in the trade and just let it play out, right? But a lot of times what happens in your example where, person has bad location, they get in, they get out too quick, or they get out and then it rips in the right direction. I feel like I can't speak for everybody, but they're probably nervous. They're probably nervous about losing. So you need to get that to a place where you're not nervous about losing, and that can only happen two ways. It's either sizing down dramatically or just looking at it simulated in like a paper environment. I'm a big believer actually in the paper environment as long as you keep records. I think we might have touched on this in the first time because I've said it a million times. If you keep records and treat it like it's real, then that's fine. But the main thing is that as the market's unfolding and you're in the position, whether it's small or no position, what you want to be doing is collecting information on how the market moves and what the market is doing to your position as it's doing its thing, right? This is something that comes up all the times, much more so, I think, in options trading than in futures trading, because in options trading, there's so many different variables, right? So I always tell traders that it is absolutely invaluable to, for instance, put the position into a monitor tab as if it was working, right? You just have it in an analyze portion of your platform, or maybe you have it as a working order with some ridiculous price that'll never fill, right? This is extremely valuable because you see it sitting there. You say, okay, I'm interested in this butterfly, but it costs $7. I don't know if I should buy it or not, and the newer trader is going to hesitate a lot and say, oh, well, that's $700 a contract and et cetera, et cetera. Okay, so use it as a learning experience. Put the butterfly there in the analyze section, and now just watch. Oh, okay, my stock went up $2. Okay, the butterfly went up to 730. Oh, now the market tanked the next day. The butterfly went down to 580. You see what I'm saying? It just becomes this exercise of watching and learning over time so that when the trader then puts on the actual position, they are less nervous, right? The only way to get rid of these nerves, or to get rid of nerves in anything in lifetime, if you think about it, is just to do it many times, right? It's to actually see it and do it many times, right? Everybody's nervous about everything the first time, right? We've all been probably nervous the first time we, fill in the blank, right? But then once we do it 20 times, then it becomes rote.
Yeah, very good. No, a lot of really good insights there. The one of the key things I take away from this of just, first of all, understanding that nobody's out to get you, and
No, absolutely not.
you do analyze. If you are getting these spots where you're just getting in at bad places and getting out at very bad places, don't put it outside of you. Figure out what's going on, and one of the best ways that you can figure that out is by reducing the risk and taking some of the emotion out of it. So
absolutely, absolutely.
Yeah, no, thank you
absolutely.
very much. Okay. Well, how would you advise a trader who maybe has been at this for 5 years plus, 6 years, 7 years, and they've just never seen any type of a meaningful result?
They should probably go back and examine their edge or lack thereof. And the proof is in the pudding, so to speak, in that if it's been multiple years and you're doing the same thing over and over and you're not getting good results, then unfortunately the edge that you think you have is not there. You either have no edge or it's not as strong of an edge as you think. It may be just a little edge, but that's not enough. You know what I'm saying? It has to be a big enough edge so that over time, if I take 100 trades, I can win on 60 of them and I take relatively small losses on the other 40 and I have positive expectancy. You know, that's real. So maybe that I would say they need to seriously examine their edge. You know, I had a trader email me recently, and it's kind of funny because I mean it was sad in a way, but it's funny also is that he emailed me a long email. It's very similar to the question you're asking, saying, "Please help me. I'm not catching a lot of traction. You know, I've been at this a little bit of time, whatever." Right? In the email, I'm not exaggerating. The email was like this long of all of the technical indicators that this person is looking at, including some lunar stuff. I mean, it was crazy. The amount of it was literally. When I emailed the gentleman back, I said, "This is no edge. You have no edge. What you've sent me is a laundry list of every technical indicator out under the sun, and there's no way that any human being can actually take in this much data and make a good decision. You need to cut this down to like 2 or 3 things that you look at, et cetera, et cetera." Right? And so that's just a perfect example. That's an actual real life example. I'm totally not making this up. This happened like less than 3 weeks ago. I received this email, and it was literally like I said, 3 paragraphs of technical mumbo jumbo. And I need all this. And it would have been like 50 different planets had to align in order for this person to take a trade. And there was just no edge there.
Sure. Very good. What would you say to a trader who comes in every day, ready to go, focused, they've done their preparation, they maybe have a game plan of how they want to handle the day, they've done analysis, and then at some point during the session while the market is live, they just get lost in the sauce and they just end up totally forgetting and kind of throwing off any plan that they had, and they just start putting on a lot of positions and get caught up in just kind of chasing things around. And this seems to just be a repeatable thing where every day they say they're not going to do it again, but some point during the session, they just keep getting lost in the sauce and forgetting what they're doing.
Yeah, that's a tough one because like I think we've all been there because it's so easy to be seduced by price action itself, and you have to really pull out, and you have to pull out for a wider view of not only what's going on contextually, but also keep with the wider view of what you want to accomplish and specifically what you think your edge is and what you want to do. That's the main thing, is that in your example, what happens to these traders is, like I said, they become seduced by price action and all the shiny things that are out there. Like a perfect example would be like a stock that has an earnings report and gaps up 50 or something, right? This is not even in the purview maybe of what the trader wants to do. Maybe the trader is a full-time futures trader. They're trying to nail down their strategy on ES or whatever. But because this thing happens, they just get sucked into it, and 9:31 a.m. happens, and next thing you know, they're down $1,000 because they're shorting this high flyer or whatever, right? And it's not even a part of the thing. So I don't really know what the answer to this is, other than just straight up discipline. Like you have to at some point write it down, say this is what I do. I don't do anything else, and just be okay with that.
Yeah, and I think at some level, maybe just awareness as well. And I thank you for saying this, that it's so seductive and it's very easy to just stare at the screens, get caught up in the action and get caught up in the noise. And just maybe the awareness even of understanding that this is a risk, this is a trap. And then we can, start to have that safeguarding against it, because it's a very common issue. So
right. I think if I could, Corbs, I'd say like one thing traders should ask themselves, especially if they're new, like if you were going to interview new traders coming into, let's say, a firm, I think one of the first questions I would ask them would be, are you okay with boredom? And see how they answer that. And if they say, no, I can't stand being bored, that could be a problem, because you have to accept the amount of boredom that goes into a good day. If you trade ES, NQ, whatever, there's probably, 2 to 4 good setups over the course of the day. I consider a good setup like one that lasts more than 5 minutes, like 5-10 minutes. Okay, I'm here at point A, I'm going to move to point B or whatever, right? In options trading, it's even more boredom. Today was a Fed day. There was a lot of action. I put on 3 trades with my subscribers in my advisory, and we didn't put them on until after the Fed. I put on those trades at 3 p.m. Eastern because there was no way I was going to get ahead of that announcement. I didn't know how I would react. And I also needed to see what these 3 stocks were going to do, the ones that I was interested in, how they were going to react to the news. and that was it. But the rest of it was essentially boredom, you know?
No, very similar story on my side as well. Nothing on the morning until after the announcement as well. And yeah, a lot of sitting on the hands today until that for sure.
Yeah.
What would you say to a trader who is very good at taking small losses, but they seem unable to be limiting or very good, excuse me, at taking small profits, but they can't really get themselves to limit the losses. So inevitably, one loss just kind of wipes out 3 or 4 good trades very easily.
You have to come into the market with a different mindset. The reason I think psychologically that traders do this is they come into every trade only with one expectation and one outcome. They only think of it as like a winning trade and how much it's going to be a winning trade. I think what might be helpful to traders is to, before they even put on the trade, before the day starts, before the week starts, especially how about before a new month starts? Know how many trades you do on average. Let's say I do 5 trades a day. Okay, so I know on the first day of the month, I'm going to do 100 trades this month. Get yourself into the mindset of already preparing yourself that of those 100 trades, hopefully 50 will be winners, 30 will be losers, and 20 will be break even. So you already are in this mindset of like not tied into what this each individual trade has to do, but you already see it as this collection of trades that happens over the course of the month. And that's a healthy way to look at it because that's how statistically things fall, right? You will probably win on half. Out of those half that you win, you'll probably have maybe 10 that make the month. I'm guessing maybe less. It doesn't take a lot. If it's a good trade, it could be 5 or 3, right? And then there'll be some smaller winners. There'll be, like I said, about a third that'll be outright losers. And then there's going to be 20% that just don't go anywhere, right? They just don't. That's fine. I mean, they just kind of chop around and you make a little, lose a little, or whatever. But that would be my advice, I think, is to kind of think of it in advance of how the set of trades is going to play out over the course of the month.
Yeah, no, it's a great point. I think it's very easy to, at some level up here, understand that, yeah, not every trade is going to be a winner. And of course, some trades are going to lose, but then not behave that way at all. Like act in a way where you seem like every single trade has to be a winner. And what you're describing there, just the law of averages, and really just coming to grips and wrapping your mind around the idea that we don't know what's going to happen next. Some trades are going to blast off, be beautiful. Those will be a small percentage. A lot of trades are going to be some version of, not really going anywhere or, being a bit unimpressive. Some trades just immediately go against us. Some trades look good for a while and then they end up failing. And not letting any one trade or not putting so much importance on any one trade, but looking at it as a sample size and even the perspective of the month. Yeah, that was very nice. Beautiful. Thank you. Just a couple more of these and then we'll move on.
No problem.
What would you say to a trader? What would you say to a trader who is having a very hard time joining a trend? Whenever the market gets directional, they just find themselves, for some reason, never believing it, and they just counter, and they're just contrarian to price, and they find themselves just fighting the action all day when a clear trend is forming, and they can't seem to just join the action when there's a trend.
Maybe they might be responsive traders by nature and not initiating traders by nature. And that can be okay. If you think about it, there's a lot of individuals over the years who made a killing in the, floor trading and market making where that's all they do is just take the other side, right? They're just looking constantly for small mean reversion or whatever. But if that's you, then that's fine because there's plenty of money to be made in that. And I don't want to knock anybody's strategy. But if that's the case, you at least have to inform yourself about what to look for contextually that is going to signal a day when you shouldn't be doing your strategy because you're going to get run over, right? That's the thing. It's okay to be responsive. It's just not okay to be responsive on a trending day. And I think a lot, and it goes back to what we were saying about thinking every trade is going to be a winner. That same trader, I think that because it happens to be a day that ends in the letter Y, they should be doing something, and they just do the same thing that they're doing. But on that particular day, they're swimming upstream completely. And like you said, they're just going to keep getting run over.
Yeah, no, very good advice. I think that it's quite difficult to, especially as you're learning how to trade, to be able to conquer every type of an environment. And it is so much easier to be able to lean into your strengths than it is to try and completely do something that's not intuitive for you or to learn a brand new skill. And just by using maybe the Nike defense, putting on your shoes and running away when it's a trend, or just figuring out that, mastering the thing that comes easier to you, maybe counter trend trading, fading, and then finding ways so that when you can finding ways to identify when a trend is forming, and then just making sure that you're not sitting there getting beat up by it. So
that you're not against it, which is a skill in and of itself. I think people need to understand that the identification of patterns and looking at your different indicators and knowing when to get in, that's one skill. But the other skill is also deep understanding of context, so that you know when to apply your strategy and when not, right? That's what I always say is, like, 9 times out of 10, all the success really comes from what you don't do. And that's the thing, is like the newer trader doesn't know when to not apply. They just apply it constantly all the time. They don't take their foot off the gas ever. And that's the problem.
For sure. Okay. How about a trader who is coming off of a catastrophic type of a loss? Maybe they've finally hit some real meaningful results. Maybe they're a funded trader who's gotten a few payouts. Maybe they've had a good month or two, and it just seems like everything's really clicking. And then maybe through a moment of weakness or just having one of these really bad days, they just unravel, and they don't just have like a bad day or bad losses, but they really do damage, maybe blow out their account, do something that just mentally and financially really sets them back. Coming fresh off of that, what would be your advice to them?
Coming fresh off of that, my advice would be to start over, be very, very cognizant of what you did to get you there, of the mistakes that were made, but also, most importantly, when you start over at like a quarter of the size that you had before. Make yourself earn it back, so to speak, and so that in that way you focus on the process as opposed to the outcome. Like, get it out of your head that you're gonna get it back the next day, or you're gonna repair it. Like, from a psychological standpoint, people want to do that. That's why they revenge trade, because there's a hole inside of them. There's not only a hole in the account, there's a hole inside of you, and you don't like that. You don't want to go home a loser. But you have to be able to be okay. Like, you need to be able to understand that you'll be a loser for the next 3 weeks or a month or whatever, until you dig yourself out of that. I mean, I use that term loosely. I'm not calling them a loser, but you get my point. Is that they're not going to be able to repair it right away. They should try to repair it slowly rather than quickly, is what I'm saying.
Yeah. Very counterintuitive, because when something like that happens, your natural instinct is going to want to be, let's throw
double down,
size back on and get back there and
and fix the problem in one day or whatever. But as we know, that can cause worse problems. So that can be a major blow up.
Yeah, very good. Okay, last one here, and then we'll move on. What would you say to a trader who just is on this path, wants to stay on this for a very long time, and they just want to make sure that every day, I just want to make sure that I'm improving? What would be your advice to them?
Keep good records, I would say. Keep account of every single thing that you do, and keep that that all important rightmost column where you write down not only your emotions regarding the trade, or what you did right, what you did wrong, et cetera. There's always room for improvement, no matter what, every single day. That's basically it. And if it went awry, or it wasn't as good as you thought it was, then you have at least that data to fall back on. And over a course of, say, a month or 2 months, 6 months, now you have a lot of data. Now you start to identify patterns, which is really, really helpful. You say, oh, I get out too early when this. I see I did it 1, 2, 3. Oh, I did it 7 times. Okay, this is important. Now I know this. Now I have some data to go by. I know this is definitely an issue. So then what you do is you go back to your trading, and instead of trying to fix all the problems at once, you just attack them one at a time. So you find that thing that you did 7 times in a month. You say, aha, okay, for the next month, I'm going to concentrate just on this. I just want to eliminate this error, and then move to the next error, move to the next error. That I think is the only way that you can really get rid of them for good, one by one. Like I think in trading, you probably understand this as well, is you just know when you come to a certain point that it's not that you're not going to make mistakes, and we all continue to make mistakes all the time, but there's certain mistakes that you'll never make again. Like, that, right? You've come to a point where it's like, okay, I'm still going to make errors. I'm still going to lose money. There's still going to be good times, bad times, whatever. But I know I don't do this, and this anymore. Like, I would never short a high flyer, for instance. That's something amateurish that I would have done 20 years ago, right? If I see a stock like with a straight up chart, I think, oh, well, there's gravity. It's got to come down, right? We're all conditioned to believe that, but that's completely ridiculous, right? Strong stocks don't come down. They're not a short at all. You want to buy strong stocks to go higher, just things like that, right? So little by little, you eliminate those errors and you come to a much better place, I think.
Yeah. If you're not tracking, you're slacking. For traders, I know something that's very important. Somebody recently just said, I think very well, that putting processes in place is how the pros work. And I think that a lot of frustrations traders have around what exactly they're doing and just things that they get themselves in trouble with really kind of come back to the fact that they just don't have any processes in place, processes to protect themselves against certain things, processes on, you know, how they're going to make certain decisions. And so I think it would be very helpful, if you don't mind, because I'm sure you have plenty of processes in place. If I could just go through some of these topics and you could kind of just talk about what is the process you go through for making those decisions. I think this would be very helpful. So I know a huge pain point for everybody seems to be entries, getting the trade analysis or learning a method and being able to put that together. But the very difficult part is entering the market. Could you talk through maybe one of or the process you have in place for when you have a trade idea that's forming, what exactly has to happen, and maybe a checklist, or just what's the process you go through for actually entering the market and pushing the button?
For me, it's relatively simple in that, with options trading, obviously with futures trading, there's a lot more variables. It would be a much longer answer. But in options trading, I just try to have the broad market at my back, or at the very least that particular sector or what's going on in that part of the market at my back. I don't like to have any longs on if the market is in a pullback mode, like even if it's just coming down 2-3 days or whatever. I don't like to be in longs. What I'll do is I'll switch into a more sort of, it's still an offensive mode, but instead of, for instance, laying out debits to buy calls or whatever, as the market's coming in, if it's coming in softly and I see that there's still plenty of support underneath us, I would switch to selling puts, or even maybe selling calls. Regardless, it's you're still making money on a regular basis, but it's different, right? Because when you're debit oriented and you've laid down a directional bet, you need the market to do something in order for that to pay out. So what I do is I'm just very, very cognizant of what the market is doing, and the types of bets that I'm placing is always in line with what the market is doing. And people who follow me, they can see that right away. They right away can see, we're in 6 trades right now and 5 of them are credit collection. Okay, that tells you a lot about how I feel about things. Or, we're in 8 trades right now and they're all directional. Okay, that also tells you how I feel about things. So for me, it's really relatively simple. I just need to be aligned with the market. And obviously underneath that, there's different, somewhat more complexity in terms of entry or whatever. But that's the main thing. And I always tell people, if you can get that right, well, you'll be fine, because 85 to 90% stocks follow, right? It's just really hard to get something going. Of course, there's outliers every day, but it's just really hard to get things going, on the upside if the S&P is down 30 that day or vice versa. It's just difficult.
Let's take a quick break from today's episode because I need to ask you a very important question. Have you ever been trading up against the hard right edge of the screen, but you're paralyzed by fear? The fear of losing money? Of course you have. We've all been there, because losing your hard-earned money is a very scary thing. Thankfully, getting out there to trade and having to risk your own capital, this is a thing of the past. Thanks to today's video sponsor, Elite Trader Funding, you can now get out there, learn how to trade, start trading, and even make money without ever risking your own capital. Elite Trader Funding is an evaluation company that provides traders with the opportunity to earn income by trading in a simulated environment without ever risking their own money. All you have to do is pick an evaluation, follow the rules, and then you're going to earn an Elite Sim funded account. Here, you can start profiting, and you will keep the first 100% of your $12,500 in profits, and then 90% of all your profits after that. And it really doesn't matter what style of trading that you're into, Elite Trader Funding is going to have the perfect evaluation for you. Whether you prefer an end of day drawdown, a trailing drawdown, something more static, they have a fast track option. They even have an option for swing trading. This is something that nobody else offers. And above all, Elite Trader Funding is a company that you can trust. You don't have to take my word for it. They have a 4.5-star rating on Trustpilot, and they have verified paid out customers inside of their active Discord community. And they're paying out up to $500,000 each and every month to their clients. Now, Elite Trader Funding has an active Discord community, like I've already said, and they have top-notch customer service. So it really doesn't matter if you're brand new to the screens or if you're a seasoned pro, Elite Trader Funding is going to help you every step of the way. Now, thanks to them sponsoring this episode, we have a really sweet deal for everybody. You can get started today, and using the promo code ETFCorbs, you're gonna get 40% off any evaluation that you'd like, except for the fast track. The fast tracks are already very affordable as they are. Now, I've also got some insider scoop that starting in early 2024, they're gonna be launching out some major changes that are heavily going to impact the trading experience. So there's no better time to get started than right now. You can click the link in the description, use the promo code ETFCorbs, get yourself a 40% discount. And once again, a big shout out to ETF, Elite Trader Funding, for sponsoring this video. Now let's get back to the episode.
Sure. Yeah, very good. When you are in a trade, just similar question here, any kind of process in place for reasons to exit or why you would take that trade off?
Yeah, absolutely. It's 100% technical. 100% technical. I'm glad you asked that, because that's a question that a lot of times options traders stumble with, because they feel like, for instance, let's say you sold a credit. This is a common thing that traders will do. You sold a credit for 80 cents. And now, so you sold it on the put side and the stock has gone up a bit. But the next day, it reverses the entire move up, and now you're kind of back where you started. And where you started was from a technical support point. And now you're thinking, okay, this could actually move aggressively lower. But what happens in options, and this is the trap people fall into, is that because there's so many factors that work in the options price, right? There's all those different things that go into it. Delta, theta, rho, et cetera, gamma, whatever. That option might now be trading for like 75 cents and be showing the trader a small profit. I will close that, and I will think of it as a break-even trade. A lot of newer traders will play the hope card, and they'll look at their P&L and say, okay, but I sold it for 80. Now it's trading 75. I'm golden. They're not thinking 2 steps ahead of like what just happened technically that shouldn't have happened in the stock. The stock has now come back to a key level where I believe it could go lower, and that 80 cents is going to blow up to 250 against you in 2 or 3 days if it continues on that manner. It really comes down to one of your earlier questions about knowing that this whole set of trades of could be like 1,000 a year. There's going to be break evens. There's going to be small losses. And the faster you can get on that and just say, nope, you're fired. Get out. You're done. The better you'll be. You have to be willing to cut stuff like right away. That's the best advice I can give. Just cut it. No problem. At the first sign that it's not doing pretty much exactly what you want, or if it does something negative that could turn into a bigger negative, that's the key. Is that not that it's doing something so negative that day. The foresight that it will turn into something bigger negative, which is huge in the options market. You have to understand this. Turn into something bigger negative over the next 2, 3, 5 days, or however much time you have to expiry. That's the key. That's like super important.
Very good. You talked about the boredom, and I think with trading, we have to have a lot of patience, a lot of strategic patience. Do you have any kind of a process in place when you fully understand that there's no edge being present here for you?
Yeah, absolutely. It's a combination of things. And again, different for day time frame as opposed to longer time frame. But let's say we were talking about day time frame futures, or even day trading equities or whatever. I would be looking at things like what is the trajectory of my VWAP? Is it dead sideways? How many times have we traded on either side of VWAP, especially in the morning session? Like if we're in the prime time of, say, 10 a.m. to noon, and I notice that the NQ has now crossed the VWAP on either side 4 times, that's a huge signal to do nothing. There's nothing there, because obviously it's directionless, and I call that a low confidence market, quote unquote, right? A high confidence market is one that moves in a direction, pulls back a little, keeps going, could be down, whatever. Right? That's high confidence, where buyers basically, or sellers if it's going down, but have confidence that a move is going to continue. And therefore, when they enter, they are not quick to get out. Whereas a low confidence market is one that chops horrifically. Why? Because the players do not have confidence, right? The players that are involved, they do not have confidence that the moves are going to continue. So they play very responsively, or they play for very small moves. And you see that in the futures market all the time, right? You just get horrific chop, and that's why. And the same thing goes for, and if I'm talking about this in a longer term sense for an options play, I would be looking at things like, okay, what is the current trajectory of the S&P and the NASDAQ? Is it more of a sideways thing, or is it within a certain range where I know, like, okay, nothing's going to happen? Are we at some support? Are we at some resistance? Are we just kind of middling? Like, is it going, doji, doji, doji within a range, right? All these things give you a lot of information that should have bearing, I think, on what you're doing vis-a-vis like your strategy.
Mhm. Yeah, very good. I got to say, just not even to derail the conversation, but after looking down and looking back up, it just keeps hitting me. You just look like a rock star sitting there, sitting on this balcony with California in the background, wearing
Yeah.
sunglasses.
No, I
This is a great
appreciate it.
frame.
I appreciate it. Yeah,
It
I'm really
suits you
happy with
very
this
well.
place. We just bought this place a few months ago, and we've just been doing major renovations. So it's kind of been hell because you know how it is when you got contractors in your house like 24/7, So I'm just now getting to the point of actually starting to enjoy it as the work is kind of calming down. But yeah, it's been great. It's been great.
Yeah,
You know.
very good, very
I
good.
will tell you, just as an aside, because you mentioned that you don't see this in the video, but it's really fascinating. I really feel bad. But where I'm pointing, it's literally no more than 400 yards away, I would say. And there were two homes destroyed in a mudslide, literally like 3 or 4 days ago. I mean, it was less than a week ago. You can look it up. And it just literally overnight, it was like 4 in the morning. Thank God neither of these families were home. But imagine that the entire house just went and collapsed like that within 5 seconds, just destroyed. And I'm looking at the rubble right now. It's just where there was these two beautiful homes. There's just nothing now. Like the roof is on the front lawn. It's just amazing. I
Oh my
mean,
goodness.
it's like. I say that because it's actually almost applicable to trading. It's like, the best laid plans can just go to waste, right? It's like, we plan and we have all these things, say, okay, I'm going to buy this beautiful house and whatever. But you don't know what nature can do to you. Just like you don't know what the market can do to you. I mean, every day is a gift, because anything can happen. It's really sad. It's different. It's interesting.
Well, maybe along that kind of harsh reality there, this might be a nice way to segue into this next topic as well, because I think that there are a lot of harsh realities when it comes to trading. And
Absolutely.
I think there are things that we need to hear and that need to be talked about. And we have a tendency online a lot to just kind of focus on all the good things, and we don't talk so much if we're careful about maybe some of the just realities. So maybe if I could, I'll just give something that I think is just like a harsh reality of the business. And then maybe you could just give your inputs, and there's not a right or a wrong way to answer this, but if you could just kind of bounce out whatever you think here. The first one being that most traders, that if they're making any kind of money, even if it's sporadic, they're making money, they're being compensated on the fact of they're putting money at risk. Let me say it like this. Most traders are being compensated on risk, not on the fact that they have an edge.
But do you mean that that their position is just sort of makes money because of the randomness, or how do you mean that they make money because of risk?
The reason they're making any type of money is because they've put money at risk in the market, and it's either gone maybe 1 hour against them, or it's gone 2 hours in their favor. So that's why they're making any kind of money. They're not making money because they have an actual edge that's working. And this is why the results are always going to be very sporadic, because they're not earning off of an actual edge in the market. They're just earning because they're putting capital at risk.
Yeah, but if you think about it, Aaron, I mean, this won't last. That can only, what happens is the reason that they're making money is because the market during that time period is amenable to them, but the market will constantly change. And as soon as the market stops being like, super bullish, where it just goes up every day or down every day, and, and starts chopping or whatever, that edge is gone. That's the thing. It won't last. That's very ephemeral. That's just a very short-term type of thing. It won't last because, like you said, they're not really making it from their edge. They just happen to have a market moving in their direction, right? Like the common phrase is, everybody's a genius in a bull market, right? When the market's really raging, anybody without an edge can just buy and hold things or whatever. But that's not trading skill. That's just investment. That's just, whatever.
Yeah. And I think that what's very tough about this is the market either goes up or down. And so if you are in that game of putting capital at risk, you will get compensated sometimes for that. But to your point, it's not sustainable. And it's a tough trap to kind of fall into, where you're on this path that you're kind of getting mixed results from. And at some level, maybe you think you're getting better at it. But at the end of the day, you don't have an actual edge. And I think very few traders do. But you're still seeing some kind of mixed results. And I think it's a tough reality that just needs to be addressed, that just because you're making money, you might just be making money because you put capital at risk.
Not exactly. It happens to newer traders a lot, right? Like, and especially it's detrimental to them when they start out that way, right? Like we've all heard this and it's totally true. If you start out winning, that's the worst thing that can happen because 9 times out of 10, you're probably not winning the right way. And then you give it all back. I mean, we've all been there in the very early stages of our career. You get excited about gains, but you don't really know how you made those gains. So then years later, you look back and say, oh, I was a lot more lucky than I was good,
Yeah, 100%. Another harsh reality, the average trader is not as concerned with making money as they are with winning and as they are with some type of an ego metric, like catching the bottom or having a big, trying to catch a top or something like this.
Yeah. This is a problem because what it does is it kind of holds you back from advancing to higher levels. At the end of the day, it all comes down to just the money, and it's also a trap. I've fallen into that trap many times myself, actually, of thinking things are going really well because I'm profitable and the wins are coming in, but then you realize you look back at the trades, you say, okay, but wait a minute, like there were these 10 winning trades in a row, and your size was wrong. Like, don't you understand? Like, you're getting sucked into the trap of just winning, but not making the money that you deserve. Like, off of those 10 trades, you should have made X, but you made, like, say, 30% of X because your size was wrong, right? If you have to, I never ever think of trading in terms of a profit target, like for a day or for a week or for a month. I always tell traders, I think this is a trap that they fall into, that the market is never going to give you that on a consistent basis because the market is constantly changing and it doesn't know. But that being said, it's totally okay to think about that profit target in sizing yourself appropriately. So, if you have a credit collection play, you have to realize, okay, so in the options world, you really only do two things. I always tell people all the time, how do you make money in options? There's only two ways. You either are collecting credit, meaning I don't think price is going there, or I'm paying debit and I'm creating some sort of spread that's going to expand because I think price is going there, right? So there's only two things, right? So you look at the trades that you do over 1 month, 6 months, over 1 year, and you figure it out and you say, okay, 60% of my trades were credit collection and 40% were directional. Then you can say, okay, how much do I want to make the next year, because I know that, okay, on every credit collection play, I want to make X, right? But that's not putting a daily or weekly target on profits. It's just saying that in those specific trades, I want to make X on each trade, so that what it's telling me is how I should be sized, so that I don't fall into that trap of say, oh, well, it's a winner, that makes me happy. No, you should be happy if you hit the target of saying, okay, I want to make X off all my credit collection trades, not in total, but on each one. And on my directional plays, I want to at least do this. So I have to size appropriately, and I have to think in terms in advance of, and this has been very helpful to me, like think in terms of advance, especially on directional plays with options. Like, for instance, I will buy something for 80 cents. And I know that the maximum value of that thing that I paid 80 for is $5. But I know from plenty of experience that I'm not going to get $5, nor do I even care about $5. It's not going to happen. I want to turn that 80 cents into, say, 240, like 3x or whatever, right? So that would be fine. So I have $1.60. Okay, so now I have some sort of a groundwork to start from. Say, okay, so that means I'll make $160 for each contract. If I want to make X off each directional play, how many of those contracts do I need, et cetera, et cetera? That I think can be helpful. That has helped me a lot in terms of just figuring out what my sizing should be. And then what it does also is it pushes you to be there, meaning like, it's very easy to just throw 10 contracts at something and be like, oh, great, and it's a winner out the gate and it's going. But you have to stop yourself and think, wait a minute, this is not worth my time. This is not worth my time. If this goes all the way where I expect it to go, I'm going to make $800. That does not move the dial for me. I need to be in 100 lot of this. I need to be in a 50 lot of that, 25 of this, et cetera, et cetera. That it's just from personal experience, that's helped me a lot.
Yeah, big time.
Yep. Yeah.
Another harsh reality. A lot of traders are getting better at finding ways to make money, better at analysis. Maybe they're better at entries. They're doing certain things that are helping them make more money, but it doesn't actually matter because they're not getting better at anything to limit their downside. So for instance, maybe they have an issue with the amount of size that they're using. That's just a bit reckless. They don't really have a good grasp on the sizing. And so they're doing all of these things and they're making a lot of improvements in trading, but they have this kind of besetting sin that they've never fixed. And regardless of how far they go, that thing that they're not fixing keeps wiping them out, or
Yeah.
potentially, don't have a grip on how to cut it off for the day and just have a daily stop loss. Something along this line. There's something probably on the risk side or kind of on the loss side that is detrimental, and it's not getting any better. And they're focusing a lot, putting a lot of attention kind of on this side of the scale when it comes to generating money. But it's almost fugazi, because it doesn't matter if you get better at these things. This is always going to be weighing you down unless you actually improve that metric.
Yep. So for me, to be honest with you, I do the opposite, and that's always helped me very much. I never really think about the winners. I'm constantly scared of what it could be as a loss. I always just think about losing. I don't know that exactly, I'm just paraphrasing, but that's a famous Paul Tudor Jones quote, right? He's said this in interviews, like, I just think about losing. I'm scared of losing. I'm always thinking, like, one of the things I think he said is, as soon as you think you're good, you're dead. Stop thinking that. Like, you're not a rock star. You're not great at this. Like, if you go into every day with the mentality of, like, not so much that you suck at it, that's not true, but you go in every day with the mentality of, like, I could get seriously hurt here. Like, every position, analyze, okay, like, what is my risk? What is my risk? Could this, I think that constantly. And I definitely do that. I'm constantly thinking about the loss side of the equation, because those winners, they always tend to work themselves out. You know it as well as I do, that it tends to, first of all, go straight out the gate. It never gives you any heat. 3 days later, you're sitting on a strong gain. And I always tell traders, there's literally zero you can learn from that. Nothing. Forget it. Just keep going. Just keep going. Okay, close that when it gets target, whatever. But focus on the ones that are going against you. And like you were saying, like, maybe they hold on to them, they blow up because they're not getting rid of it. And the reason for that, like I said, is because they're caught in this mindset psychologically of, like, they all have to be winners, or they're emotionally invested in each one. That's a big part of it. I think newer traders are more emotionally invested in every single trade as it happens, whereas more seasoned traders could give a crap. It's like, it's 1 out of 1,000 for me over the course of the year, maybe more. I don't even know how many thousands. Just get rid of it. It's not happening. Just cut it.
Yeah. No, it's crazy, this paradox of how much emphasis and how easy it is to focus on the winning trades. But in the reality is, the winning trades really tend to take care of themselves, just like you said. Yeah, and
absolutely.
So much of the emphasis needs to be put on the downside, which unfortunately gets very little attention usually.
Right. Because if you think about it, what's interesting is that you could make errors in how you manage the winner and you'll still be okay. But if you make errors in how you manage the loser, right, if you leave that on too long or whatever, that's going to be a problem, right? Like, obviously getting out of that winner too quickly is a problem in and of itself, but that's not going to ding your account. What's going to ding your account is that out of those 10 trades, you have those 3 losers, and you, instead of focusing on them, you're just focusing on the 7 winners, thinking those 3 are going to come back. And then the next thing you know, you're net negative, right? Because those 3 trades have taken away everything you made on the other 7.
Yeah. Harsh reality. This may be the last one we'll do. A lot of traders are never going to make money because they have a need for certainty. They want to join a group where somebody's going to tell them where to get in and out. They want to buy a system that's going to tell them when to get in, when the lines cross. And that need for certainty is something that doesn't exist in this business, and they're never going to make money for this reason.
Right. As harsh as it sounds, I think they should get out of the business. Your mindset is just totally wrong. You have this idea that the thing can be conquered, or that there's some mastery at the end of the rainbow, and this doesn't exist. We're all just trying our best and getting better all the time. And the reason that there's losing trades all the time is simply because technical analysis, at least that's my edge. I start with the charts. It's not infallible. It's not perfect, right? The most beautiful setups fail. Right? Like, I have an idea that we shouldn't move below this level, so I'm short puts below this level, I'm long calls above it, and the stock reverses, and it takes out that level. Now my puts are at a loss, my calls are a loss, I have to get out, and I take a hit. I mean, there's no, I look back and then I say, did I do the right thing or not? And if you look back and you did the right thing, then there's nothing else you can do other than just cut the loss shorter, right? I don't even, we might have touched upon this on the last interview because it's something I tell my subscribers constantly is that they need to figure out what are good losses versus bad losses. And in my example of what I just gave you, where the setup was perfect, we came into support. Okay, we're short puts, long calls. It's definitely long at this point. That's a good loss, right? If my setup was correct, I didn't miss any information. This is what should have happened. The fact that it turned around the next day, that's a good loss. There's nothing you can do about it. It doesn't all work out. I always tell people, like, if it was all perfect and TA was just worked all the time, there'd be no market. Computers would arb that out a long time ago, right? I mean, there'd be no market. Any computer could figure that out if all TA was perfect, if all setups were perfect. And like you said, you just have to buy when these lines cross or whatever,
Yeah. Yeah. So kind of the weird part of that situation is that the thing that would, in theory, make trading beautiful, certainty, if that existed, we wouldn't have a job.
Yeah, exactly. There would be no market. Yeah. I mean, the market, if you think about it, the market pays us to take on risk. So if there was certainty, there wouldn't be any risk. So then the market wouldn't pay us because you only get paid when you take on risk. So it wouldn't exist.
Let me ask you this. From your perspective, having, I'll say a seasoned trader and being involved with a group, being involved on social media, I think that you would probably recognize most of the topics that are just kind of beat up and talked about all the time are, fairly useless or not very important. From your perspective, is there maybe like a question that you wish I would have asked you, or you wish people would ask you more, or topics that you wish people talked more about?
Yeah, absolutely. And it's so funny you should say that because I didn't mention any names and I won't now, but like in my room this morning, we actually touched upon this exact thing because this guy in my room, he said something fantastic. And he said something I don't even remember. It was something like, the mark of a seasoned trader is how they deal with boredom or something like that. And I said, wow, that's so good. Can I tweet it? So I cut and pasted it and I put it on Twitter. And then when I put it on Twitter, I was telling my group, I said, one of the things that pisses me off about Twitter is there's a lot of people on here who have much bigger followings than myself, and they get much bigger engagements from their posts. And they just keep posting these like bromides and platitudes and like, you know what I'm saying? Like the trading psychology 101, like obvious stuff that like, okay, I get it. Yes, you should minimize your losses, whatever. You should let winners run, whatever. But there's not anything specific there that is ever going to help anybody. I'm all about specifics. The things I talk about are very, very specific. I think you should do this now for these reasons or whatever, so I that's my answer to that. I think there needs to be more of that. I think that people need to wake up to the fact that they are using social media for engagement and not really for knowledge or information. They're not going there to find knowledge. They're just going there to be engaged. They're just scrolling through shit and, whatever. I don't know. And like, oh, this is nice. This guy's talking about trading. I'll follow him or whatever. But that's not any type of advice that's going to either A, make you money, or B, move the ball forward in your evolution or whatever. This is not, because you don't learn things. That's just not how things work.
Yeah, I think the majority of social media is the picture perfect idea that if you don't have a plan, you're going to be a part of somebody else's. And whoever is creating all of this kind of like mass content all over the place, their plan for you is to sit there and engage and consume their content. And if you're not having a plan of what you're doing with your day and you find yourself just, scrolling through, you're very much just becoming a part of somebody else's plan. And to your point, it's not a way to get better at trading for sure.
Yeah. And also to that point is that, and I say this specifically to traders out there who are new, but I think a lot of people, even seasoned traders, are falling into this trap. If you are in the middle of your trading day, you shouldn't even be looking at that stuff. You shouldn't be looking at anything. You should not answer email. You should not be looking at Twitter. You should not be on your Facebook. You should not. You should be fully engaged with what's going on, even if you are not doing anything. That's where all the money is made, is in the engagement of watching closely, so that when the opportunity presents itself and you've been watching for an hour straight and not doing anything, not only has the opportunity presented itself, you are then ready to take it. But more importantly, because you've been watching for an hour straight, that the context is there. Like you've seen it developing. Like you see it every day. Classic thing, especially in this recent market we're in right now. This is very applicable to like the last couple of months. Early weakness. You saw it today. Opening drive lower. Can't get lower. Can't get lower. Oh, now we double bottom in the NQ. No. Okay. So for me, the trade is, okay, we're going to go up to the 8 EMA, maybe the 21, maybe the VWAP. But I'm not going to do it right away. I'm going to wait and let that thing develop. And I'm probably going to wait until maybe we get to the 8. And I'm going to see how we act at the 8. And I'm going to say, aha, now I have a lot of information. The market failed to go lower, ripped up to the 8 EMA on the 5. And guess what? Instead of rejecting hard to the penny, which it usually does on the 8, which a weaker market would do, what did it do? It rejected 6, 7 ticks, went back to the 8, nothing flat. Okay, this is a buy because now I know we're going to 21. And if we can make 21, we're going to VWAP, right? I have all this information that I've digested. Why? Because I'm focused. I'm not looking at social media. I'm not distracted. You know, it's all this kind of preparation for the trade. Like you're not really preparing anything. You're just watching so that you understand that the context is developing that's going to support what you're about to do.
Yeah, that's a really good point. That it sounds very obvious, but it should be said that if you're in the middle of a trading day and you find yourself just doom scrolling on a platform,
right,
there's something very wrong there. And you shouldn't be surprised if you have a hard time sitting through the boredom, because if you're taking these little breaks to get yourself hyped up on dopamine, of course you're not going to be able to come back to the charts and just sit there and have strategic patience. That would be something to look into for sure.
You can't. And that goes back to one of the earlier conversation we had about boredom. Is I would ask a newer trader, are you okay with boredom? Are you okay? This market is open 6.5 hours a day. Okay, you say you want to be a trader. Are you going to be okay with not touching the mouse for roughly 5 of those 6.5 hours? Because the time that you're actually doing something is going to be this much, and the time you're doing nothing is this much. Are you going to be okay with that? If not, then maybe you need to choose something else. This is not for you. You need to go to a casino, or you need to go somewhere where the action is faster all the time.
Yeah, 100%. I know you mentioned Twitter, and I believe last time we talked, you said that was is that the platform that you're the most active on? Or is it
that
YouTube?
one in YouTube. And YouTube, yeah. I'm actually really excited about YouTube because if you recall, I used to do these weekend videos for about 15 years straight. It was called the Shadow Trader Weekend Update. It was super popular, and I took about 1.5 years off from it. I just got a little bit burned out, and then I also moved out here, so there was, I was away from it. I'm actually in the process right now of building a new studio out here and going back to that, but on a much more professional level. I have some people that I'm connected with now that are, know how to do film and do sound properly and lighting, and, building a little set for it. It's going to be exciting. So my goal is to sort of recreate, or maybe even better, do what you see in maybe a half-hour, 40-minute format on network television or CNBC, Bloomberg, or whatever. They have plenty of shows where it's like 30 minutes and this show talks about this or that, but from a 100% technical perspective and my own perspective, what I bring to the market, as opposed to just talking about, you'll never hear me talking about fundamentals of a company or whatever, because I don't know anything about that, so I'm pretty excited about that. So I'm hoping basically to be more active on YouTube in the coming months.
Oh, very exciting. I'm excited to hear that. Now,
timeline-wise,
timeline-wise, you think within the next couple months, you said?
Yeah, absolutely. I think within 1 month, actually. We're actually pretty close. We've been working on building a set out here that's probably about 95% of completion. And it's going to be cool. So I think hopefully really soon.
Oh, very cool then. Well, we'll make sure that, of course, we'll link it in the description, and people can check that out. But that's very exciting, and we'll all be looking forward to having resurging back on YouTube. We'll have the doors wide open for you to come back on.
I appreciate it. Absolutely.
For sure. Well, listen, I can't thank you enough for being on and just let me ask you questions, and then just hearing your responses has been great. I know that everybody's going to get value out of just sitting here and listening to you. I'll give you the last word if you'd like to say anything as far as wrapping up or to leave us with, and then I'll end the recording, and then I'll say goodbye to you proper once we stop.
No doubt. So firstly, I want to give kudos to you, because this is the second time that we've had a discussion in this particular format. And I'm being very sincere when I say this. I think your questions are extremely insightful, and they obviously come from a place of somebody who is doing this themselves and understands the nuances of what's going on. And so I give you much credit for that. So it's really great. I do enjoy speaking with you for that reason. It's just fantastic. As far as what I could impart to anybody as far as last words, context. As my mentor in the profile, Jim Dalton, taught, price is just an advertising mechanism, right? time regulates all opportunities, right? Everything's happening within the confines of some time frame, and all the time frames are just interplaying with each other, and that's what causes the different movements in the market. And lastly, the volume judges the success or failure of any auction. And that's basically it. Beyond that, it's all just context.
Great words to end us out on. Thanks again for being a part.
Thank you. Appreciate it. Take care.